Happy Friday. The sun is out, and I am so excited today because I have Edie Jerome with me, and she is going to tell us everything we need to know about reverse mortgages. She is not Tom Selleck, so we can really, you can ask her questions, and she knows because she's been in the mortgage business for a long time, over 20 years, and she has all our answers. So Edie, this is a topic where everybody's mixed up. Nobody knows what it is, and everybody's afraid of it. Give us the 411.
You shouldn't be afraid of it. That's number one. Number two is your home is totally protected. You never lose the deed to your home. You can always live there, and it's just like any other mortgage. It's still a lien on your home that eventually will have to be paid. But for when you are there in your home, you are not obligated to make a payment, and you won't go into foreclosure.
Okay. So
And
that's great.
yes, a reverse mortgage is great for someone that has all their equity tied up in their home, and they need assistance in their home. They need money to buy food, for utilities, for everyday expenses, for health expenses, and a reverse mortgage comes in very handy. Keep in mind that you can have another mortgage on the property. And when you take out a reverse mortgage, that mortgage will be paid in full. So you don't have a payment. You can execute the option to make a payment if you like, or an interest only payment, or any payment, because there's no prepayment penalty.
So let me ask a question. What about qualifying for this kind of loan? Because,
To qualify for this kind of loan, you have to be 62 or older. Yeah, here we are, Betsy.
right.
And you have to have some residual income, because you have to have money to cover the taxes and insurance. If those are not paid current, the lender will set up an escrow, and that will take up a large amount of your money, because there is a formula as to how much money they will hold back for so many years to pay the taxes and insurance. So you want to make sure that those are always current. So you are 62 and older, have to have some type of income.
So Social Security.
You can have Social Security, you can have a pension, you could still be working.
Okay.
Or you can have assets.
Okay, can you have assets? Because, correct me if I'm wrong, but when you're applying for a regular mortgage, you could have $2 million in the bank. If you have no income, they act like you don't have any money in the bank.
Exactly, but a reverse is different.
Oh.
A reverse, they will take part of your assets and use that as income. And they will also take a certain amount of the money you're getting back for the reverse mortgage and calculate that and use it as partial income. So it does work a little differently, and you really need to know the nuances and all of the little details to make sure your client is getting the right loan for them, because not everybody should do a reverse.
Okay, so let's dig into this a little more, so that when I understand it, then our audience will understand it, I hope. So you just mentioned you're paying it back. So let's develop a scenario. I come to you, I have a home worth $250,000. I have it paid off, and I need some additional income to pay for my home health care. So I come to you and I have $75,000 in the bank, and I have Social Security of $2,000 a month coming in. What does that scenario look like to you?
That is a perfect scenario because it shows you have monthly income that probably will cover your taxes and your insurance. And it shows you have a little bit of money in the bank and that you're taking this mortgage out to help your economic stability.
Okay, so now we take the mortgage out. What does that mortgage look like? Does it come in a lump sum? How does that come?
If you're doing a refinance, because you can also purchase with a reverse mortgage.
Okay, well, let's stay on this one right now.
Refinance. So if you're doing a refinance, what that means is they will go through the whole process, and at the closing table, a mortgage will be recorded against your property. So your property is still collateral, just like a regular mortgage. It's the same thing. The only difference is these are government insured and don't have to be paid back until there is no one left in the house. Then the house either has to be sold by the heirs or refinanced by the heirs, or if it's upside down, God forbid, given back to the bank.
Okay, but when you sign that paper, do you get money?
Yes, the money will be distributed to you in two portions. You will get a designated amount at the closing table, and then on the 13th month, you will get a final amount. And that's called the whole amount. Now, there are other options available to you if you don't want to go that route, but that's another discussion.
Okay, so I come to the closing table and let's say I figure, okay, my house is worth $250. I'm going to take out $50 because I figured it's $25,000, for a year for my care. So I'm going to get half of that at the closing. Now I put it in the bank and I can pay my home health care person. And then the next year I can pay, and I can do that. And then I can either say, well, I'm going to take I can either pay it off or, hold on, I'm sorry. I am trying desperately to turn my phone off and it won't. I have it on silent and it's ringing. So what does that mean? Sometimes I think these electronic things have a mind of their own. Like you've heard of the radio turning on when you're not. Yeah. Okay, so mine's on silent, but it is ringing. Then let's say then I die, then my heirs pay off the 50, they sell the house, they pay the 50, and they take the residual, which is really what they have to do if it's a regular mortgage. They got to pay off the mortgage.
Same process. It's the same process. The only difference in money that you get at the table with a reverse mortgage is that the formula for a reverse will only let you get a designated amount of money based on your age and life expectancy. And they will never give you more than, let's say, 40 or 50% of the value of your home. So everybody thinks they take all the money out of your home. No, they still leave a large amount in your home. Now, the big thing that you have to know is that on a reverse mortgage, there's what's called negative amortization. And this means that if no money is being paid every month, the interest is added back to the principal balance. So it means your balance goes up every month. However, your house appreciates a certain amount every month And most of the time they equal each other out. So you're still maintaining that equity position. So
Okay. So, and how are their interest rates on these as
they're
opposed
pretty
to?
low. Most of them go by the LIBOR, which is the London Index Borrowing. So most of the rates go by that, and most of them are ARMs. You can get a fixed rate if you want, but that limits the amount of money you get back substantially. So,
And are most of these, do they amortize over 30 years or 50?
yes, they amortize over 30 years.
Okay.
Yes.
And yeah, and what would you say the average age is of people doing this? Do you know?
You know, I've had people who are 62 and want to do this, and I've had people who are 87 and do this. I think it just depends on how well you are situated economically and
yeah.
what you need to do. And also, I've had a lot of people come in and say, please don't tell my children that this is
Mm,
our personal business and we don't want them to know.
that's interesting because they're afraid the kids are worrying that they're spending their inheritance.
Well, I had a situation just like that where there were 5 children. They made the mom so crazy, she landed in the hospital the night before closing. And they thought it was a heart attack, but it turned out to be anxiety. And I went to the hospital to close the loan
Aw.
and was met by the children. And there was a big argument and fight. And
And what do the children think? I mean, what is there? I mean, just, this is our business, really. We help people through mortgages, through home ownership, but it's really about the people. And it's really about us helping them in their lives and educating them so that they can make good decisions. Obviously, this woman wanted and needed the money.
she did. She needed a bed to sleep in,
Oh
and
my
the kids
gosh.
wouldn't buy her a bed. She needed food, and they wouldn't buy her food.
Oh,
So she finally said to them, I am sane. I know what I'm doing. Get out of here. I'm signing. And they met me in the hall. And needless to say, it was not pleasant,
but
but she got her money. They
good.
felt their inheritance was going away because this happened to be a very expensive home with no mortgage.
And and that's an interesting thing. I mean, this is what they call the rich wife's, the poor wife in the expensive home. A lot of times, women want their homes, and
Right.
their homes get paid off or whatever, and they're in this home, but they don't have any money or any income. So that is a perfect example of lots of equity in the home,
Yes.
but she didn't have money to buy food.
Exactly. Exactly. And that's where my heart breaks when
Yeah.
people come to me in such dire need. And it does happen a lot.
Right,
A lot.
right. And she could have moved, but then there would probably, this was probably safer for her than having the vultures coming. And where would
Yes.
she go and all of that?
She was much happier and she got her bed. She was able to have home health care. It was a perfect scenario. Just perfect.
That is a great story. And
Yes.
I'm so happy you told that story because that is how people are going to understand the purpose of reverse mortgages. And maybe the horror stories are that people don't understand that they do have to pay them back, and they don't understand that they are interest bearing for, but everything is.
Well, they hear the TV ads, they hear all the misnomers that are going on, and they feel, oh, it's a terrible thing to do. Well, it's not if it fits the situation and you understand it, which is why I meet with my clients as many times as they need to meet to make sure they understand what's going on.
This is fantastic. You are a godsend because a lot of
thank
people
you.
don't touch this. They don't understand it, and rightly so. They shouldn't deal in things that they don't know. And, you know, a lot of people, especially right now, the older people can't move because there's nowhere to go.
Right.
They can go if they want to spend another $400,000, which most of them don't. So if there's a way and here, look, I mean, I'm selling stay in your home, but I want my clients to be happy. This is a way they can stay in their home, get some of the money out of their home, and be able to live out their golden years with some help.
Absolutely. And, you know, if you are in a huge home and you need to downsize, a reverse mortgage is perfect because then you can take the money out of your current residence to buy a condo where there's no stairs or a smaller home.
Okay, so explain that to me. Why is that different than, because qualifying is easier?
Yes, it's much, much easier. It's just an easier transition, and you still have to have that down payment, but then you can still move to a smaller place, still have home health care, and just be more comfortable and not have some of the expenses that go with your current residence, like worry about snow plowing,
Right.
and grass, you know, all
Right.
these different things, and still be comfortable.
Okay.
I
don't mean to interrupt you, but a special key that we have to keep in mind here is this qualifying. Because even if you have, I'm going to reiterate this, even if you have money in the bank and you think that you can qualify for a loan, you cannot if you have no income.
correct.
So you can complain, you can whine, you can say it isn't fair. That's the reality. Where this, you could have just your Social Security and be able to do a transaction.
Yeah. You know, for example, say you're self-employed.
Yeah.
And you show no income on your tax returns and you have $1 million in the bank. Well, on a conforming loan, that's getting you nowhere.
Right.
Absolutely nowhere. But you can take that money out of your home if you're 62 or older and buy a home with a reverse mortgage and have a rate that's in the high threes to mid fours. I mean, for no payment, for not showing a lot.
And right, and you can pay it.
Yes.
Okay, so let's say you're that person and you have that business where you're not showing a lot of income, but you have income. All legal.
Yes.
All legal. So you can pay that. Nobody's telling you. It's not one of those things. I guess 100 years ago they used to have a penalty for
there's no
paying off. Yeah,
no.
Yeah. So that's great.
Yeah.
Well, you have been terrific.
Thank you. It was
Thank you
pleasure.
so much. I'm so excited. You will be, if anybody wants to talk to you, they can reach out to you. I put your phone number on our link. They can reach out to me, and I have a beeline right to Edie. I can send you over. And everybody, please have a safe and joyous weekend. And thank you again. I really, now I know what I need to know.
Yes. Be well.
You too. Be well.